Next, the next player, Vad Yazvinski. Vad, over the last 6 months of last year, if you remember how, I know we've all tried to forget the last 6 months of last year. Vad was playing our Strategy Lab Open competition. It's a reader portfolio competition. Scored a 34% gain in the last 6 months of last year. Well, 5 months of last year. If you remember how those months were, the market was way down at the same time. He too has a website. And amateur doesn't mean neophyte. Vad's a very aggressive investor. He actually works in private equity. Vad has mixed long plays and short plays in this market to really good effect. He's been our lead most of this year. So Vad, why don't you tell us what your best long play is now and also a short play?
Okay. My favorite stock is still the same one I kind of recommended back in Orlando. It's Chinese company called Fuxi International. Stock symbol is FSIN. And it's a Chinese company that produces bimetallic wire called CCA. Basically, long story short, they're cheap company selling it, at a cheap growth company selling very reasonable multiples. And I just kind of my overview of the market. I think the market is going to keep kind of trading in the range of somewhere on the Dow between, where we are right now, 12.5, maybe to a little over 13. So we're probably for the remainder of the year, it's going to keep going up and down. But you're going to only be able to make some, beat the market if you're going to do some active investing versus just buying an index. And the reason for that is, as Kim pointed out, I think Fed has been very successful in, getting calm back into the markets, the unintended consequences, inflation, and before the year end, my bet is they're going to have to start raising rates, which is not healthy for the stock market.
Vad, tell me one stock you're shorting and why.
One of my favorite ideas, it's called Fleetwood Enterprises. It's FLE. Basically, what they do large trailers, RVs, and it's not a very difficult. In this market, it's kind of very easy. If you went to the pump and you know how much it costs you to fuel an RV right now, I would say it's a pretty safe bet. They also have about $100 million in debt that they have to refinance this year. They might be able to get most of it, so they might survive, but it's definitely not a healthy way to do business right now.